authentic, authentic, connected, structured, authentic, connected. I'm a good lad.
Hello, everyone. This is Mark Czubachowski with MCZ Align, and this is Align Health Insights, episode number 15, where we're really asking the question about Q1 2026 in the rear view. Was it a real recovery or just capital concentration dressed up as one? Companies like Whoop, Open Evidence, Talkiatry, Verily, getting the majority of the money. There's about 8 companies that were cited in the funding report by Rock Health in Q1 2026. So there were 12 mega deals that took 59% of the U.S. digital health capital in Q1. We're tracking toward almost 50 nine-figure rounds in 2026. Peter, is that concentration a sign of a healthy market, or is it a sign of a top-heavy market?
Yeah, so Mark, I really appreciate the opportunity. Pete Micca with Caduceus Capital. Look, COVID put a spotlight on the depth of investment in health technology, and a fair amount of capital entered the market very quickly. Some of that was irrational, some of it was prudent, like any other cycle. We're seeing organizations now really looking for a path to profitability, looking for, a true market, and have solutions that are focused on delivering, real solutions to the big rocks and the big problems in healthcare: access, affordability, cost, et cetera. And so it was, through the lens that we sit, inevitable that there would be some form of market adjustment. That being said, we see plenty of capital entering the market. Organizations, investors like ourselves are looking to write bigger checks to a smaller number of organizations. And so it's not surprising in all of us that you see, much larger investor groups looking to place bets with organizations that have, real solutions. And, with AI, technology is not good enough, right? Having a channel partnership that can bring your solution to market quicker, faster, better is a real differentiator, and will ultimately, command higher valuations and more capital.
Yeah, I agree. So, Mark, outside of these small amount of logos that a lot of capital is chasing, where are early stage founders actually finding capital right now? I mean, maybe Peter answered a little bit of it from his POV. The follow-up question there: are the terms better or worse than they were 12 months ago?
I think it kind of depends. Like, I would say the first thing that popped to mind was revenue. People want oh man, now we can actually close meaningful contract values and scale our team without having to raise like a meaningful seed first. I think that's the first piece. But then the second piece is that I think that if you're an early stage founder, the main goal you should figure out is what are you actually trying to build towards? I think that, we are YC, and, there's a bunch of companies that are in similar categories, especially in healthcare. And it's if your business can be commoditized relatively quickly, and because there's so much pivoting that happens, especially when it comes to this particular healthcare category, you should figure out hey, where do I want to go long-term, and what is the generational business we want to build? And so for people who are early stage founders, generally, I recommend focus on funds that actually care about what you are doing, one, and two, are generally early stage in nature, similar, and want to back people like you. Because I see too many people go to the mega funds and are man, I really want to do a deal from them. And actually, funny enough, YC's advice is no, take money from people who actually are aligned with where you want to go, and either provide you leverage on your cap table by way of introductions to customers or whatever, or are just capital, right? And are people that you can trust that are at your back. And I think for me, I'm I just want people who are smart, who I think care actually about what we're doing, and are either can stay out of our way or actually be a helpful hand. And that's all that people should generally care about, instead of these kind of weird hierarchies of I care only about if I get around from A, 6, and Z done. I'm well,
right.
That matters, maybe that doesn't.
Yeah, makes sense. Makes sense. Look, one more follow-up question for you. Beacon Health is building in primary care, a space that's historically underfunded relative to its impact. When you're competing for attention against companies that just closed nine-figure rounds, how does that shape how you make your case to capital and to customers?
That's a great question. I think that what I would say is two things, because there's like a few layers to that question, right?
Yeah,
Like
for sure.
the problem of how software has traditionally been built is like, yes, I will deliver this point solution that is a software layer that allows for our staff to do X, Y, and Z more efficiently. And that's great. Like there's a lot of room for that. There's a lot of businesses that do that. Awesome. I think like now, and now Sequoia has written an essay about it, so it's popular or whatever, but kind of like this whole AI services frame where now you can, instead of requiring people to change their workflow to actualize the benefit of what you're doing, you can own the outcome. And the moment you own the outcome, that opens up a lot of interesting possibilities.
Mhm.
So for us, especially in like when we see primary care, we see a lot of kind of room to improve on how
Oh,
these
yeah.
traditionally have done things. And like private equity has tried to roll up practices as a means to solve some of these problems and have very, very mixed success, to say the least. But I think our perspective is like, oh, well, now AI can make not only the economics of doing primary care, but also the economics of doing value-based care really, really good. Whereas before they probably were not. And so for us, it's like, how do we become this platform that enables for, especially these large groups or primary care practices in general, to be able to succeed in a lot of these arrangements where they probably wouldn't have been able to otherwise. And like, I think you'll see more and more businesses try to own a lot of these outcomes instead of saying, yes, like here's now a thing that you can buy that becomes commoditized and a race to the bottom super quickly.
Yeah, makes sense. Makes sense. Hey, Jordan. So from the buyer side, does it matter whether a vendor just closed a mega round or does that actually make you feel more cautious?
I don't think. Hey, Mark, thanks for having me on. I don't think any. Um, I don't think anyone on the buyer side slash health system slash provider side, um, one of their first questions is not like, "Did you close a mega round?" I think that's. I don't.
How many hundreds of millions of dollars have you?
But
Well,
maybe
hey,
you know what?
no.
Maybe it should be though. Maybe it should be. I'll take notes for that. But I think just to kind of riff on your question. I mean, I think the thing that I think is I totally appreciate the two perspectives from Peter and Mark. But I think one of the things that I see a lot of is a lack of understanding on how things plug in or they connect to the outcomes or the problem that we're trying to solve.
Yeah.
Uh, so like a lot of founders and you know those that raise extreme rounds, right? They'll get into their own head and their own process around these are the things that we're trying to solve. And they forget that the buyer on the other side definitely has those problems, but they also have 500 other problems. And so if you can think about like how to connect the dots between all of those different, not all of them, but a lot of those different problems and make their life easier, I think that's missing. And so rather than have like 100 point solutions, I think there's going to be a lot of consolidation in the market. There's going to be a lot of acquisitions, M&A, because the market won't support that. So I think any founder or tool or solution, if I were on that side, the things that I would be thinking about are um, capital is important to the end of making sure that I can help support my partner and solve some of their additional problems. And if we can be flexible in
Yeah.
helping them do that, you're going to win contracts more often than not.
Well,
Yeah, if you wouldn't mind me interjecting, Jordan, I 100% couldn't agree more. The companies we work with, whether we're either investing in them or helping to advise and connect their go-to-market strategy, we'll say to them all the time, look, don't fall in love with your technology. Tell two things. One, be able to articulate the problem you're solving, and two, demonstrate that your solution doesn't add to the workflow of a healthcare provider, right?
Mhm.
It makes it harder and more complicated. Nurse practitioners, physician assistants who are all in love with Epic are not gonna they're gonna throw up all over it. They're not gonna use it. So you've got to show not only that it creates a return on investment, but that it doesn't cause friction to their existing workflows.
Yeah. And one other point to just highlight, because you made me think about it, but um, there's a lot of opportunity to quote pilot, right? So there
Yeah.
would, like, hey, we want to do a pilot with you. If we said yes, if we pilot, we would be drowning in pilots, right?
Yeah.
And so I think there's an appetite for those things. Um, but I would also advocate that if you're earlier in your stage, that you find a partner who's in the medium size sector that can be willing to give you feedback and help you build the product or iterate on the product in the right way. So I don't want somebody coming at the series A level saying, like, this is the way the product works, here's our integration plan, and there's very little deviation that I can do because it's super successful, Jordan. It's sort of like a take it or leave it thing. And you're sort of like, I'm not saying I've had a lot of those conversations, but some of them. And I think, you know if you're able to kind of respond to the person that you're selling to on how to solution and adapt the product, not 100 different ways, but a couple different ways, I think it will be advantageous because it'll allow you to be more, it'll allow you to sell into other health systems and provider environments, knowing that you've done that diligence and knowing that you've spent time with a
Yeah.
partner for 6 months building the product.
Well, so actually, and even more than that, what I'll say is now, like with AI, the ability to orchestrate and own workflows from end to end. So, for example, for you, Jordan, it's like, yes, to your point, you're apparently being pitched on point solutions day in and day out that do all sorts of different things. And it's like, well, your incentive is actually not to just take one point solution as a pilot, but instead find a company that can do or be a long-term partner for a lot of this other stuff to orchestrate all these workflows. Because for you, it's like, well, why would I have 10 different people managing 10 different point solutions when in reality, I just want one person to deal with? And so I think our frame is that, like, I think for us, Beacon Health as a company generally is like, okay, well, how can we be like this long-term partner for people? Just because once you start with one workflow, and actually to backtrack for a second, it's not like the software layer anymore. It's like, actually, how can we have, things like computer usage agents or browser usage agents that can use the computer or browser a way that a human can to go and do really complex tasks? Because then once you have that in mind, it's actually that, like, okay, cool. You want to do this referral workflow that you're throwing 20 people at. Oh, you want to do this like risk adjustment workflow that you're throwing 100 people at, or you have like 3 software vendors for. It cuts through a lot of that and then grounds it in specifically your point, the problems that we generally want to solve, and being able to orchestrate those problems together to coalesce around something that is actually meaningful for your business.
I will just say, Jordan, I heard what Mark's saying. I agree with you, but I feel a lot of empathy for buyers right now. There's just a lot of stuff. It seems to be confusing and a lot gets lost in the sauce. Look, great segue to say, like, AI as table stakes versus AI and ROI, right? And Peter, I'm just going to skip around and ask you this question. I just feel like, given your finance background, you might be the best to answer this. What would be a defensible health tech ROI study? Like, what does that actually look like?
A defensible health tech ROI study through whose
Like,
lens
how
of
do how do you know that, you can really want to, take a stab and do something beyond a pilot with, an early stage company as a health system, as an example? Like, what are you calculating? What is the calculus there that someone's saying, okay, we're going to make the bet?
I mean, it's a long dance. It starts with some of the points that both Jordan and Mark made around our, it starts with both parties open-minded about what the solution is, or they
Yeah.
just want to sell you something. If, Mark is just trying to sell something to Jordan and Jordan is just kind of looking for a predetermined solution,
Yeah.
that it's not going to work because both parties are biased about
Correct.
what they need or what they're looking for. Right. So it kind of starts there, and it is a long and winding road, which is part of, why, being concrete and upfront is so important. Ultimately, third party validation and data are going to drive whether or not there's an ROI that, both parties are comfortable with. There's a mathematical ROI and then there's a cultural ROI. And
Yes.
you could have one without the other and not be successful. You could save some money and say, oh, wow, that was great. But it wasn't transformational. And in today's world, particularly in the primary care side, um, a lot of rural and the focus on rural health, a lot of rural, hospitals are going to go out of business. Who's going to
Oh
fill
yeah.
that? Who's going to fill that vacuum? Maybe it's some FQHCs, maybe it's, Beacon Health and some others, right? You've got to understand up front, like, what's success. And success, our view is technology that provides an ROI of a few basis points just isn't worth the time and the hassle. It's got to
Yeah.
be transformational. And it can't change the culture. It's got to enhance the culture. And the constituents have to want to use it. They have to, feel like it's part of their workflow. Because otherwise it won't work.
Yeah.
Well, I
It's
think on
interesting.
that, just like one point there is, I feel like it's two things. One is like, can you do what you say you can actually do? And then two, do people actually love what you're doing? Because I think for me, it's like these rooms, they're being pitched by all sorts of people who are promising the earth, wind, moon, sun, star, skies, whatever. Right. And
Yeah.
so the whole goal is like, can you actually do this thing that you're saying you're doing? And do I trust that either you have done this for other people or you are going to be a long-term partner for me, which is like, we're all in a very relationship driven business. And I think everybody understands that. And so it's like, okay, how do you build and facilitate trust? And I think that's generally the first step to even getting to a place where people feel like, oh, okay, cool, I can continue with this or not,
Yeah.
Well, and that's why our view, and we actually wrote a white paper on it, why we believe channel partnerships is so important, because it
Totally.
provides that kind of independent third-party validation that an organization is willing to kind of put you in front of their clients and in front of their established channel, in a very meaningful way.
Well, go figure. In a world of AI, relationships and trust is still important.
all that matters.
We think it's
The
honestly, we
most
think
more.
that the marketplace will put a premium on a relationship and channel interaction because AI will commoditize itself. It's actually commoditizing itself because it's being done so cheaply, and if it's being done so cheaply, someone won't pay a premium for it.
Correct.
Oh yeah. Yep. Absolutely. I agree. Okay. So Jordan, there's like this emerging counter narrative that AI scribes might be increasing coding intensity and downstream payer cost. Are you seeing that play out? And how does that change the conversation, in the boardroom, the sales cycle, or the investment thesis of these AI scribes?
So, I mean, again, this is just my own personal view.
Yes, sir.
But I think everyone will have that technology. I don't think there's a place eventually that won't have it because of how much it will help solve for time with clinicians. But to Peter's point earlier, I think it's important to talk about like what ROI you're after, because if you just use that particular use case, like many times that actually is a cost to the health system, right? From an economic perspective.
Yeah.
There can be, but and somebody will probably yell at me for saying this, but you have a hard time like proving that there's economics that benefit. It's not likely that the 50 or 20 minutes that you save the clinician, they're going to say, gosh, I would love to see another patient tonight at 7:00.
True.
Like that's not the decision. It's, do I get to go home and spend time with my kids? And that's a value, so I think you just have to be upfront about the value, because it's going to allow you to retain, if you're a health system or provider, it's going to allow you to be retaining your clinicians, providing a better quality of life, and you're going to keep people, right? And if that's your goal, that's what you want to
Yep.
do.
Yep.
I think also just making sure that you're asking the question. So, because as you guys were talking earlier, I was thinking about like people come in and they're trying to sell. If you just think about like AI note taking, right? It's like, we can solve this problem. It's a 20% reduction, and they're already selling, and they don't know that we just solved X, Y, and Z problem already, and that we're not looking for that solution. We're actually looking for something,
This other thing.
I don't know,
Yeah.
A, B, and C.
Right.
So it's just, I'm sorry to repeat on this, but this is such an important point because you got to listen and you got to make sure that you understand the problem that that particular customer is looking for, or partner is looking for, and how you can be a solution for it, not just in the short term, but long term. That's going to keep you. Otherwise, like, that's really, it's hard to bring people in who don't understand that. And then measuring the ROI in both economic and, as Peter pointed out, culturally, like, does this matter?
Yeah. I mean, for the founders out there, right? Don't be a hammer looking for a nail.
Yes, 100%.
People know it right away. It's cliche, but they know it right away. And the other point is, like, healthcare is different, man. I mean, in other industry, technology usually bends the cost curve pretty quickly.
Yep.
In healthcare, initially it actually raises the cost because it adds another layer because of what I'll call the trust factor. We're actually going to do a white paper on this. Trust is such a big part of healthcare because you're dealing with people's lives. And in the initial adoption of technology in healthcare, nobody trusts it. Nobody, zero. And it adds cost until the trust component engenders and people could say, okay, yeah, this really does work. Yeah, this really can save me time. Yeah, this really can get me home to my kids. Yeah, this, I'm not gonna have to do, see 20 different patients in a half an hour, right? Once that trust factor, starts to hit, then you start to bend the cost curve. But that can take a long time in healthcare.
Yeah. I've heard this in my 23 years doing what I'm doing, that healthcare moves at the speed of trust.
Yeah.
It's something people say. So the market is shifting from this scribe mania to agentic and copilot AI across operations. So Beacon Health is already operating in this space. Your agents are closing quality gaps, managing prior auths, handling patient outreach, and inside the EHR. What does an agent do, Mark, that a scribe or a dashboard cannot?
100%. So I was just at APG yesterday in San Diego. And so, I think that I speak at some of these conferences and there's like interesting category errors that I see. I think that like in general, and it's not anyone's fault. It just is where I think that like when people say agentic AI, they mean like a lot of things. And that might be like the LLM that they use to, review a document and then spit out an email. It could be like, the scribe, that basically creates a note off the back of what they're doing. I think that for me, like when I speak about like agents specifically, I'm not talking about like voice agents, which can like call patients and, do things and create some structured fields or whatever. I'm talking about like agents that can now manipulate and use computers or browsers or like EHRs, payer portals, whatever, the way that a human can. And the reason this is so different is because, to Peter and Jordan's point, it allows for you to open up a lot of like the problem surface area in a way that wouldn't have existed before. Now it's not like, oh yes, I need this physician to use my thing. Or I need like this staff member to use my thing in order to get to this financial ROI. It's like, no. Like now we can just use the thing, right? Like you can give the agent the ability to go and use the thing the way that a human would to get to this complex outcome. And so I think that like for me, it's not just the scribe, like, it's not like, oh, well, hey, I see this patient who, has diabetes, has hypertension, has XYZ thing. It's actually like, oh, interesting. Now in the chart, can we tee up the lab orders for each of those individual things? Can we actually like notate the quality measures and there's like a bunch of other workflows that we can take, that we can take place. Can we like pre-chart that patient prior, right? Like a bunch of the work that you would have expected an MA to do is now possible for like an agent to do on the EHR like a human would. And so I think like from our perspective, this fundamentally changes how people think about, implementing this type of technology. I think that everyone should be focused on instead of, and I think there's actually a reason why people are very focused on scribes because it's a technology that people are using very, very quickly. Open evidence has grown insanely quickly. But the next step will be not only just that scribe layer, but the action layer. Like how can we do things inside the EHR, the payer portal, wherever, like a human would?
Right. Right. So I'd love to get the buyer and investor lens on this question as both. So you guys, different POVs. Start with Jordan. If you had to bet one budget line on an agentic AI workflow paying off in the next 12 months, where does it go? And what do you need to see to write that check?
First, I think you have to Mark's point, like would define what agentic means, but
Look, I have so much to say about that, but
no,
I
no,
want to hear what you guys
it's okay. I
have to
understand.
say.
I'm just being stupid, but I do think
No.
I think here's the way I would answer it, which is um, there was I learned I'm trying to de-identify this story in my head, but like someone told me recently about um, a particular use case around an AI agent going through patient history, um, and if anybody's worked in like any of the EMRs, you know, like there's a data overload. There's a media tab, and much of what's in the media tab are scanned documents that maybe a patient brought in, you know, from a historical context. um, Many of those things like get pushed away, and you know at the time they're relevant, but they get logged, and so they're, you know, 5 years ago or 6 years ago or whatever number of years ago, and we forget about them, or your clinician forgets about them. And so, like, one of the use cases for things like that I think we need to be doing faster. It's hard, but being able to identify the context and the relevancy in a particular incident. So, if you have a patient in front of you and you don't know that 5 years ago on that PDF that was a scribbled note that was scanned in, there may be missing information that was not discreetly captured in
Yeah.
the EMR that you have use of today. But as part of the family history, that context matters in that particular use case in that scenario more than ever. And so, like, part of
Hmm.
what we need to faster is that ability for those agents to kind of work in the background with the context and offer up solutions to a very smart, intelligent clinician in real time, so they can make a decision in the 20 minutes to 30 minutes that they have the patient in front of them,
Mm.
thousands of data points and very little time to go back and look at the patient history. So, like, those are the use cases that are ahead of us, and I believe 100% they're going to be here very shortly, and already are in many cases. But measuring an quote ROI on that in a line item in a budget is going to be very challenging. And so
Yeah.
I think we're going to have to figure out and adapt to both the economic ROI there, and there needs to be one, but also like just the human ROI.
Mm-hmm.
Yeah.
Yeah, I don't have much to add to that, Jordan. Well put. It needs to be complementary. It can add to the workflow. Obviously, we've talked about that before, but I mean, you know, the 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 reality is it's got to be easy to use, and the ROI. You know, there's an opportunity cost, right? That's really hard to measure here, and I think part of the value proposition, frankly, for an emerging growth company like a beacon is to help healthcare providers understand what are those, you know, qualitative considerations, what are those opportunity costs, how could they be measured, how could they be presented to their board, their executive management team, so that people understand it's more than just a line item in a budget.
Yeah. Yeah. All right. Let's move over to like exits, M&A, and the IPO window, Mark. As a founder building in the market, how does the M&A and exit environment shape how you're thinking about scale? And are you building to grow independently, to partner, or to be acquired?
Yeah, I transparently, we're just in the mode of going for broke. Like, we're growing quickly, and so from our perspective, it's like, how can we grow and become a generational business regardless of what everybody else is doing? I actually don't keep track of the M&A environment because of that. It's just something that, like, yes, obviously maybe if there is some world in which Anthropic's like, hey guys, I will give you $10 billion. Like, that's interesting. But I think that the goal for every company in this category should be, how can I get to a place where I'm partnering with as many of people in this particular sect or whatever as possible? Like, our goal is, and why we care about primary care, it's because nobody else cares about primary care. Very few people are like, I mean, there are people who want to like create, enabled primary care and like own that stack. There's like a bunch of like care delivery businesses. There's a bunch of point solution, but being like a tech business, like an AI forward business, and like trying to sell into these types of businesses, it's traditionally been really, really hard. And I think our frame is like, oh, interesting. It's almost as though if we own, or if we can be like an actual long-term partner with these types of businesses, we can become the platform on which they are building everything else. And so it's like not, oh yes, you like, let's bring in this other point solution. It actually, to Jordan's very early point about like, I don't want to orchestrate 10, 15 different point solutions. It's like we become the first layer that can then enable all this other technology implementation across the board for them. We kind of become like our goal is to try to become more of like an AI native MSO for them. Right. And so like that, and for us, growing that is the main priority. Growing the number of lives, growing the number of patients, growing the number of practices that we're working with to be able to do that for them is the thing that we care about. But yeah.
Jordan, as a buyer inside a major health system, how does this frothy M&A market influence your buying decisions with vendors when you're thinking about betting on them for the long term?
Well, they can't go out of business. I mean, one of the things that I thought about a lot in my former role was, if we do partner with this company, like, will they be around in 12 months? Because I don't want to spend time on a company, is going to be out of business. I also think, to just follow on to what Mark's point earlier was, I don't know if, I think the thing that people get caught up on is like, the sell, the M&A, and I, trust me, I get it. But I also think if you do your job, right? If Mark comes in, solves a problem, we want to grow with him exponentially, because he's like truly valuable, and he's bringing on more and more value and more patients, and exponentially he's growing, which means other systems, other partners are going to grow as well, because they're going to be interested in having that problem solved if it's a solution. And before you know it, Mark is going to have, millions of exponential growth, and he's going to be sitting there in his Series C, going like, I'm oversubscribed. I'm looking IPO. I'm just kidding, but you know what I mean. Like, the problem is not like, thinking about IPO and liquidation and acquisition 10 years from now. It's like, put one foot in front of the other and solve value. And if you do those things and you do it exponentially, like, you'll be in a position that many or very few companies are, to be honest.
Yeah.
I think it's the true partner, right? Like, I think that's a lot of like customers that we're talking to, that's what they want. And very few companies are in a position to be able to provide that. And I think that like, it's almost as though if you do what you say you do, and people trust you to do more, and they want you to do more. Crazy, right?
It's like an 8-year-old. Like, if my 8-year-old does the stuff that he told me he was going to do, I might give him more rein,
Exactly. Correct.
Yeah. I mean, look, I IPOs and M&A is what I did when I was at Deloitte, and I get it. It's fun. It's sexy. It drives valuation points. And I think, you can't put your head in the sand either and just ignore what's going on in the marketplace. At the end of the day, you got to get back to basics. And what we look for is like, who's your biggest customer and what would they say about it? Right. And I think ultimately, much like, being at Deloitte, if your largest customers are going to say good things and vouch for you, then you're doing the right thing. The market will dictate the path you go down, right? IPO, M&A, strategic, whatever, right? Ultimately, if you're a buyer like Jordan, you can't put your head in the sand either and ignore the fact that this company may be out of business in a year, right? So you have to balance all that. And that's why I think, getting back to the beginning of the conversation, understanding, an emerging growth company and saying like, what's your capital raise history? What you're, doing some due diligence, at a high level, as if you were going to invest in the company, which you are. You may not be making a financial investment, but you're making you're making a financial investment of your time and your people who could be doing other things. So you need to kind of, and we're actually doing this for the Scottsdale Institute. We're doing some boot camps for a number of healthcare providers to say, what are the kind of the due diligence steps that you need to be taking beyond just operational to kind of ensure that this organization is going to be viable, because they may have a great solution, but if they're just burning at a rate, or they're inefficient in their burn rate, or not doing that in a prudent way, that's going to impact you as ultimately as the customer.
Yeah. Yeah. Yeah, I'm trying not to say it, but in my mind, I'm going, well, the goals of the venture or PE firm are not necessarily the same goals as the customer stakeholder that the technology is serving, right? I mean, total value of paid-in capital and distribution of paid-in capital raise, ladder funds, not being friends forever with our customers, unfortunately. But that's the way it is. So I don't know. How do we end up solving for that long term?
But you can also do some due diligence on the investor, right? I mean, it's very common for us to, take a company in as an accelerator, do a safe note, then do a seed, and then do a Series A.
Yeah.
A substantial part of the company, help them find a new investor for B. We're doing it right now, actually. And then cram our equity from 30% down to, 5 or 10, take some money off the table, pay our LPs, but still have skin in the game. And so investors who have that kind of graduation kind of mindset is different from the just, churn and burn and move on. We have long relationships with many of the companies we invest in because we're willing to, cram our equity a little bit to get, to get a smaller portion of a bigger valuation.
Yeah, I think you're right. It depends on the firm, right? And, I think that's going to be more important, as time goes on, especially what you're saying, Peter, just how these relationships are really becoming like the anchor of getting some of these deals done.
Yeah. Well, I think also, Peter, to your point, like it would behoove a lot of those investors slash founders to reserve. One of the things I continue to think is it's a huge value, and I don't know, a lot of some places do it, but providing sweat equity to your partner and giving them skin in the game. So one of the things that I did in my former role was we would put capital in for sure, but we would also want, if we're going to help them grow a build, some level of sweat for the work that we're doing. And once we're an equity owner and we have sweat in the game, then we're a little bit more sticky because we care a lot more about the company. And it perpetuates itself. And if you can continue to solve problems for us, we can solve problems for you. So I think that's just like an underutilized asset that I don't think everyone realizes.
And look at the culture.
Great point.
Look at the culture of the investor that's backed the company you're working with. I mean, about a substantial part of our limited partners are actually healthcare organizations. So culturally, we come from that, kind of cloth. We understand it. And, you bring a different mindset to the table when you're working with these companies. And then as a buyer, right, ask, who's invested in you, and are they just silent financial investors, or are they helping in some way? And that'll give you some inkling as to the culture and the mindset of the investor group that's backing the organization, whether they're willing and able and have a track record of investing from pre-seed to seed to A, or are they just, a one-trick pony?
Correct.
Yeah. This is my favorite section just because it involves talent, leadership, and who wins. And as you guys know, I am an executive search professional, so I love questions about talent. I think talent's the most important thing personally. I will go and ask, I'm going to ask this to Peter again, just because you're evaluating so many portcos, right? And I'm wondering, what's the one leadership profile that's most undervalued in the healthcare technology market from a venture perspective right now?
It's easy. I mean, the obvious answer is, have they done it before and all this other stuff. But, many successful founders were first-time founders. right? So how can you evaluate that, right? I mean, but what you're really assessing is, do you have a gritty individual who knows how to balance failure, knows how to rebound from failure, knows how to take no and not take it personally? And look, it's sort of like playing golf with somebody for, 4 hours. You know, at the end of the round, you know, do they cheat? Do they get, frustrated when a bad shot? Do they throw their clubs into the, water and stuff?
It's a great
Like,
analogy, man.
we like to get to know our potential investments, and that goes beyond a Zoom call. We obviously have to meet them face to face. We have to do all the due diligence stuff. But at the end of the day, you want to break bread and get a sense. I mean, those are the intangibles, right? Those are
Mhm.
the things you can't define or teach. And sometimes, believe it or not, we're all looking for reasons to say no at the end of the day. And
Mm.
believe it or not, one or two things, how you react to your kids on a call, right? You're on a Zoom call and you're like, something goes wrong with your kid and you're yelling the crap. I mean, there's so many little things that could kind of point to, and in
Yeah.
and of themselves may mean nothing, but if if you see a pattern kind of resigning, which is why it takes a while to assess investments, portcos and
Yeah.
companies, like, hey,
Yeah.
when are you closing around and can you be our lead investor? I'm like,
Yeah.
you want to get married? And I mean, we just started dating and you want to get married and have kids. I mean,
Yeah.
like,
Yeah.
it takes time. And what founders don't understand is when it's taking that long, it's because we're trying to assess you. We've already
Yeah.
made the decision on the solution, because if we didn't think the solution was worth it, we'd be gone, right? And so when
Yeah.
it's time, we're actually assessing you.
Yeah. Yeah. Now, just really quickly, Jordan, from a bigger organization perspective, you have a leadership role at a larger health system, and when you're bringing people onto your team, I mean, what are some of the attributes that you're looking for in this ever changing market of AI, and what is that 360-degree skill set that you're looking for?
It's a great question. And, I think if maybe all of us would answer this differently like 5 or 10 years ago. Um, but I think for me, like one of the biggest things is the ability to be flexible and
Yeah.
understand that you don't know all the answers. Because I think the scary part is when people come in uh, and you're looking for somebody who is like certainly the smartest person in the room, but thinks they know the answer to everything. That's super scary to me, even if they are brilliant, because there I don't know the answer to everything, and it's evolving
No.
so quickly. Like, how could you possibly know? I think the most important thing is being adaptable, knowing that you're gonna try to find the answer and learn, and, um, and then having a lane, of expertise, and being curious around that, because if you can be curious, if you can continue to learn and grow, find the right answer. We're all evolving in this world of AI at the same time. Some people may be ahead in the race, and some people may be a little behind. But there's constant learning that's required, and so I think that to me, like that's the most important thing.
Yeah,
Thank you,
it's
Mark. Jump on it. Yeah.
that's because it was just like for me, it's tenacity and curiosity. Those are the things that I care about, and like
Yep.
because I think for me, my job is literally that, right? It's like to be able to eat glass and go and make things happen regardless of whatever the circumstances are, and bounce back and be like, oh yeah, everything's fine. Like everything might be very good, everything's fine. And also the ability to be like, okay, well, help me understand what actually is going on. Let's like actually have some intellectual curiosity about the things that we're trying to go and do, because for us to try to be a generational business, that's like table stakes. And so I think everyone that we try to recruit or try to hire, it's like we're very intentional to make sure that they have those characteristics, because otherwise they're just not going to be. My co-founder and I are very much like that. And so it's like, if you can't mirror those characteristics, it'll be very hard for you to succeed in that environment.
Well, I've had the pleasure of knowing you for a long time, and you embody the founder archetype, Mark. You are, definitely awesome at that. Great attitude all the time. One sentence each on the close, gentlemen. Uh, what's the single most important thing a healthcare leader should be doing differently in the second half of 2026? I'll start with you, Peter.
Uh, customers, like relentless focus on customer needs, what they want, what their issues are, and how their solution can be tailored to meet their needs.
Okay. Mark?
Just be curious. I think every time I speak now, I'm just like, I know there's a lot of things going on. Be curious about what is possible because a lot of it's changing.
Okay. Jordan?
I like that answer. I mean, I think be curious, but also like I said before, be thoughtful around listening. Listen.
Yeah. Yeah. All right. So where can my listeners find you guys? Peter?
Yeah, so I'm one of the managing partners at Caduceus Capital Partners. Our website, Caduceus, is pretty transparent. You can see, our focus, our thesis, our portcos, our solutions, and my personal email, my Caduceus email is on my LinkedIn profile. So feel free to reach out.
Okay. Mark?
Yeah, you can look us up, beaconhealth.ai. You can reach out to me personally at mark@beaconhealth.ai. If you are somebody who is interested in what we do generally, email me and I can actually send you my phone number. I'm very responsive over email, but also over text.
Okay. Jordan?
And LinkedIn for me as well. So
Yeah.
very, very responsive to that. So
Awesome. Awesome. Well, look, everyone, this has been the 15th episode of Align Health Insights, and I am so grateful because this is what I get to do for work. I get to talk to really smart people about healthcare, which I love and have been committed to over the past 22 years.
Authentic.